How's everybody doing? Welcome to this week's Athena.Trade webinar with Ryan Duthie from Radar Relay. Welcome to our Athena.Trade members that are here in person, members and guests who are logging on remotely to check out this webinar. Mark Lewicki, I'm from Red Leaf Advisors. We're a crypto asset hedge fund that resides here in the totally awesome Athena.Trade space. Now, whether you have or haven't heard of Radar Relay, I think it's definitely a platform that you want to get to know in the Ethereum token trading space. Radar Relay is a modular trade network, or more specifically, a relayer that provides network liquidity pools and maintains virtual order books for hundreds of tokens. The platform lets you trade peer-to-peer directly from your wallet with thousands of users worldwide. They have a really fantastic website with some really informative content and an in-depth FAQ section that really helps walk you through how to integrate with the trade on the platform. It's definitely a product that requires a little bit of technical know-how, in my experience, but they do an excellent job explaining everything about the product in the FAQ. They recently came out of beta, have facilitated over 40,000 transactions, have order books for close to a couple hundred tokens, and have traded over 150 million USD notional. Ryan, if those stats are a little dated and the numbers are much higher, please correct me. Anyway, without further delay, let me introduce Ryan Duthie, Head of Business Development for Radar Relay.
Thanks, Mark. I really appreciate it. Those stats are pretty close. We've been lucky to have a lot of growth in the course of this year, but the exciting part recently is that the market's been sort of sideways. We're trending a little bit lower that we've been seeing there, just given some of the problems. So anyways, I'll start. You can see the screen at least. Thank you for that background. That was super helpful. I want to explain high level what some of the different exchange types are, who we are in Radar Relay, expanding a little more on what Mark said, and then a little bit about the smart contract ZRX protocol that we're built upon. A lot of you are probably familiar with that as the ZRX token. And then talk a little bit about sort of the future of decentralized exchanges and what some of the growth opportunities are in this space. And please feel free to stop me at any time if something doesn't make sense or isn't clear. So, a lot of you guys, Mark gave me a little background about who some of the Athena.Trade members are and what you guys are working on. I'm sure you're all very familiar with centralized exchanges and obviously Coinbase and GDAX and Bitfinex and Binance. What we're doing at Radar isn't by any means trying to replace what those are doing, because those are still very necessary fiat on-ramps. It's still really important to get the world that's holding dollars or holding yen to step into the digital asset world by having a fiat on-ramp. So, that's not the world that we play in and not something that we really see ourselves competing with at the moment. So if you look more, the original decentralized exchanges were stuff like Ether Delta and IDEX. I don't know if you guys can raise a show of hands if anyone's ever used any of those before. Okay, cool. Yeah, so you guys have a little familiarity. So that was sort of the first step in the right direction, but as you guys can probably attest to, that it's a little clunky, and essentially you're giving up your custody through escrow, which is still essentially a point of danger for hacking, and having to hold a token of one of these exchanges is just sort of also a very centralized topic. So I think for us, we realize that stepping one step further into the relayer space is what we really think is the future of how these digital assets will be exchanged, and sort of how the world, and you talk about this concept before, like a token economy. We really believe this is the infrastructure that's going to be built on. And so at Radar currently, as Mark said, it's all Ethereum-based assets. So they're all the ERC-20 standard we've got about 170 different tokens that are currently on there. I would say about 36 of them are what I would call liquid. There's a lot of them that, we've sort of listed, but they're very sort of up and coming projects, maybe don't have the user flow yet to really make it, huge volume yet, but a large platform for growth going forward. So then we talk about Radar Relay. What we're trying to do is build a brand. We've been very lucky that we've got a ton of early adopters. So it started out that our biggest fans were people that were victims of sort of centralized exchange hacks. So a lot of Mt. Gox people, and there's too many to really name right now, but a lot of folks coming over that had hacks in the past. They were excited about this decentralized concept. People that were just big fans from the beginning, and we still have this core group of about between 10,000 to 14,000, what we call active users. Our typical trade size is about $2,500 US. And so we'll get people that are trading on our platform and realize that maybe there's a slight bit of slippage versus where the price is on Binance, but they like the upside of having their own custody of the asset. And a lot of times if you're trading these tokens and holding it, they're looking for a large appreciation over a several year period. So they're not as worried about maybe paying a very small percent over where maybe Binance is trading. So that's been also a way that we've introduced a lot of our proprietary trading firms that we're partnering with, because they're obviously able to benefit from some arbitrage opportunities against centralized exchanges. With that being said, we'd love you guys to check around our user interface. I think a lot of people have really liked that. It's been a large reason when we look at our feedback, why people come back and use us versus some of the other options in the market currently. So what is the 0x protocol? I think a lot of you are probably familiar with 0x protocol already, but it can get a little murky and complicated if you haven't really dug into it yet. So essentially what it is, it's just a smart contract that we sit on top of, and it's a messaging layer. So we have our own order book with bids and offers in it. Someone comes in, transacts an order, takes an order. What happens is that takes from our peer-to-peer network and actually gets moved and is transacted on the Ethereum blockchain. And that's how we're able to never take custody of someone's order. That's why can't be hacked, because if someone hacked us, they could just execute an order. There's nothing there to steal. And we're really just building pipes that allow people to consummate these trades on the Ethereum network. So as we go from there, and as I touched on before, we're not trying to usurp what's going on in the centralized exchanges. I think they're about 99% of the volume currently, and the world that we operate in is about 1% of transaction volume currently. So what I was saying before is, I guess, we're not trying to take away from what the centralized world is doing, or we don't think that's a battle that we're going to win. But what we are excited about is taking a lot of that market share as people realize the dangers involved with having custody in one area in a centralized exchange. But the real excitement is, some of the growth. So we talk about a tokenized economy in an area where eventually, if you talk about security tokens and us moving traditional financial assets on more of a blockchain infrastructure, we believe the decentralized peer-to-peer infrastructure is going to be what that is built on. And also you talk about concepts like non-fungible tokens and collectibles, and that's going to be an area where we're able to pick up a lot of the early traction as well. So we're excited about the future and about the growing token economy in that respect. And some of you guys that are more familiar with Ethereum, might have seen recently that the network's been a little bogged down with a lot of activity. And so we're constantly working with them to explore ways that we can make it, a faster channel to work with. One of the only downsides of a decentralized network is that mechanism I spoke of before about consummating trades on the blockchain does leave us to some latency on transaction time. So if the network, we can only trade as fast as the Ethereum network can work. So some folks that have come from traditional high frequency trading backgrounds, that can be a point of friction. But through some of these topics here on the slide and sharding and side channels, side chains, I should say, hopefully that's going to help with the scalability of the overall Ethereum blockchain. Yeah, so that's just high level what we're doing, kind of where we see the growth and what we're interested in. Sorry about any delays or any feedback on my end here, but appreciate you guys listening in, and just want to ask you guys, or give you guys some time to ask any questions if you had it, or any clarifications too.
Hey, Ryan, what was your personal opinion when Coinbase acquired Paradex?
Yeah, that's a really good question. It was great, I think. But, well, first of all, we were really excited because it really validated the space. Coinbase is the premier brand in the digital asset space, especially from a trading perspective. So it was great. It really validates the space. I think as Coinbase looks at the future, it's been interesting. If you're obviously following a lot of the stuff they're working on, they're sort of growing a mile wide now, and they're trying to have their hand on sort of every facet of the cryptocurrency world. And I think it probably also helps when you're making as much money as they do on fees every month to be able to go out and buy some stuff that you think's interesting. So I like the team at Paradex. Those are good people over there. And, I was really happy for them. And I think they, Coinbase just really sees the growth and the opportunity in the space.
Hey, do you guys think that you will be acquired by a centralized exchange?
No, we've I should say we don't have any plans to sell. It's a really exciting time, and we really like the opportunity to be able to build and grow. I've only been here for about 3.5, 4 months. But I know that the rest of my team really is a strong believer in what we can build together and what we can accomplish. And we're just sort of scratching the surface now. So, we got involved with this not to try to turn something over. It's a long-term play to, participate in this growing token economy. So that's been our perspective so far.
I'd just like to jump in for 1 second and invite anybody that's logged in remotely to feel free and submit some questions, because this is indeed a live Q&A.
Have you guys been talking at all with Market Protocol? I was talking to somebody over there recently, and they said they were been in touch maybe with somebody over at Radar Relay and potentially using their protocol to do derivatives with you guys.
Yeah, so it's been really exciting. We've been in touch with a lot of people. Market definitely is one that is a great protocol and someone that we're keeping close on our radar. No pun intended, but for us, we think that any natural extension of folks that are already involved in financial markets, they want derivatives, they want unique ways to manage risk. That's going to be all very important things in the future. And so we realized that to be, a place that's built to last and a place where we can build dedicated users we need to expand our product offering and have more options like that. So those are all very interesting protocols and interesting options to us that we've definitely been exploring.
Ryan, what's your background? How did you get involved with Radar?
Yeah, that's a good question, Mark. So I was actually working at DRW for the past 8 years in their New York office. So my background's on the energy side, trading mostly oil and refined products, derivatives. And then I've been personally very interested and involved in the digital asset space for probably about 3 years. And more as I realized I would spend my nights reading white papers and looking at opportunities, I thought, you know what, maybe I should make this a career focus. So, was able to find the Radar team, thought they were an exciting turning point. And consequently, they didn't have anyone that was market facing. They were all concentrated on building this great technology and fostering that. So I live in New York, so I came in as the person that could go talk to more of the financial market community and help them get ingrained there.
Still.
You mentioned you had 10,000 active users. Is that 10,000 different users per day, or how does that work out?
So yeah, I'll have to go back and look at the our exact criterion. We were really looking to see the number of people that come over a certain period of time, and I forget. I don't want to misspecify that, so I'll have to go back and look at that and email it back to Mark so he can get it to you. But that was something. It's also hard as a decentralized exchange because no one's signing up or logging in, or so it's not easy to sort of, we can't say necessarily that it's one person, I guess, but this is just from our own analysis of what's been trading and what the activity's been.
What's your fee structure like?
So we're currently zero fee. This is until, eventually we want to increase usership. And we're lucky enough that we've been able to raise, successfully fundraise, and all of our investors understand that the point for now is to grow usership and to grow the market share, and then eventually focus on, generating fees as a sustainable business. But right now it's been great. Our investors understand that we've got to get people involved. We got to get people on board. And we don't want to do anything to damage, the adoption. So I think we are lucky in the fact that I think most of our users aren't necessarily fee sensitive, especially when you look at what the rest of the market is like in terms of fee structure. So, we don't see it being a too painful to turn on fees. So I think people aren't really the point of our value proposition. People aren't super price sensitive at the moment, but obviously eventually as the market matures, that's going to become a point of friction potentially.
Brian, I have a question. What's your user growth look like? And what are you guys doing? How are you targeting more users, not getting more users to sign up?
Yeah, so the user growth, I guess what we've been looking at more is our volume growth, our transaction growth. And I don't have the numbers through June yet, but through May, it was about 350% growth month over month since we started in December. And the current method right now is, it's interesting. Most exchanges or most venues start out, if the CME has a new bond contract, it's typically, many big market makers will start in stream markets, and liquidity sort of comes first from the institutional side. And then people come in, whether it's buy side funds or whatever, and trade it once the interest is there. And so it's been interesting for us because for me, coming from a typical financial markets background, everything's kind of been built backwards. So you've got a bunch of retail and very early adopter users that have come into our market or our interface and sort of started it from that angle. So now we're trying to pepper in, you know, the institutions, the proprietary trading firms, the type of traders that can help facilitate liquidity and make the books and the tokens, you know, be a little bit more liquid and deeper market. And so I think for us to grow, that's a really vital and important step that we're gonna have to take.
Do you have any like market making programs or incentives for liquidity providers on your exchange, or do you have any designed or existing or planned?
Yeah, so we do. I'll have to grab your email from Mark after this. So we're currently just revamped our API and SDK documentation to make it a little bit easier for folks to get onboarded. You know, it sort of helps point out some of the main differences between our peer-to-peer trading network and some more centralized networks. And what we're doing is partnering with a lot of firms that we think are, you know, great growth opportunities. And so far, it's been very positive. I think we've got a lot of demand from the token side that wants to push liquidity to our network. And we've got a lot of interest from growing trading groups that want to get involved in something that's growing this fast. So right now, with not having fees, it's not like we have like a rebate program in place, like you'd see in a traditional market. But we're starting to build some interesting incentive models for folks to grow with us, especially on the trading side, that I'd love to share with some of you guys if you want to grab my email from Mark.
Thanks.
On the topic of market making, how big of a sticking point is gas? Do I have to pay gas every time I do a cancel replace?
Yes, that's a great point. So currently, you have to pay gas for every order you cancel. If you're a maker, if you're just market making, you're not paying any gas. The taker that's aggressing on your order pays the gas to bring it to the Ethereum blockchain to get transacted. So the really interesting thing that we're excited about is version 2 of ZRX, which has been just finishing up auditing right now and should be out in August, is giving us the ability to allow automated traders to cancel all orders in one function. So instead of paying gas on, if you had 500 outstanding orders in the books, currently you'd have to pay gas to cancel 500 orders. Now it's going to be a sort of mass cancellation where you could use one gas order to cancel all those, which we think is much more friendly towards traditional proprietary trading firms and market makers.
What's your most liquid product?
So right now it's the DAI stablecoin, so DAI. And through a little digging, we found that it's actually really interesting. So the maker team that started DAI is an awesome group, and it's a super interesting project. If you're not familiar with it, I'll have to send over a link to take a look at. But what we found is a lot of market makers within Radar, because it's all Ethereum-based tokens, they wanted to, you know, obviously manage risk and keep the risk of holding Ethereum overnight and having some volatility associated with that lower. So what we found is a lot of our market makers actually will convert whatever tokens they're trading back to the DAI stablecoin sort of at the end of trading or throughout trading. And that's really helped them manage their risk and lower a lot of their variance on the trading.
Just another kind of a technical question, but I certainly don't know, and I'm curious. Is there a speed difference getting a fill, for instance, if I'm executed, let's say I've got a one contract bid and there's a one contract offer, right? Is there a difference in speed versus, matching that order and executing it on the blockchain versus if I want to buy 10 and there's a 5 lot and 6 or 5 one lots and I take them all down and I'm not really price sensitive. I'm more interested in getting my size. Is there a difference in time to execute those 2 orders because the one is basically multiple transactions?
Yes, that's a good point. It is, in that specific example, you'd be technically consummating 7 trades if you're sort of like sweeping a book down like that, and it could potentially take a little bit more time. But as opposed to if someone had a $100,000 bid and that was the one trade, there is a difference because that's one signed order versus maybe 7. So yeah, that's another interesting quirk that makes it different than what traditional financial markets have, and a good point.
Well, Ryan, I know that you have limited time today and we're only doing this for about a half an hour, so we very much appreciate the presentation. I think it was informative. If there's no more questions, I think we're going to wrap it up.
Awesome. Well, I know Mark can give you my email. It's for those of you that are remote too. It's Ryan RYAN.Duthe DUTHE at radarrelay.com. And you guys are a target market. So right now we've got a lot of interesting relationships we've been building with proprietary trading firms. And as we alluded to earlier, a lot of incentives for folks to start trading and helping build out the liquidity profile. So please feel free to email me, and I'd love to talk to you more in person too and get more specific. But yeah, thanks for the time, and really appreciate the intro, guys.
Thanks a lot.
Thank you.
Thank you, Ryan.
Take care, guys.